In this video, we're going to talk about the structural levels on NVDA, Apple, Bitcoin, and XRP. We're also going to do the institutional cheat sheet. I'll help you to interpret SLs. The key is to know and do not guess. If you guess, the markets will mercilessly take your money. Stay tuned, there's so many secrets that I'm going to share with you. Welcome to Decoding Financial Markets, brought to you by the CTKS method to give you a huge edge across all financial markets for Forex, yields, stocks, commodities, and crypto. Here you'll learn about markets at the institutional level. Let's run the numbers. When the markets go red, it's vitally important to know where the structural support levels are, and also to do your cheat sheet. When we look at fear and greed inside the main markets, we can see that the stock market greed went up slightly. Also, the crypto fear and greed index is now at extreme greed at 78. The next FOMC meeting is approximately 28 days away, and we've seen the probability of a rate ease decrease. This is placing positive momentum on the US 2-year and the US 10-year yields. The interesting thing is not translated into DXY strength, but it did translate into dollar-yen strength. And we've also seen the Aussie dollar come down. It's really good to look at the Forex pairs. They can give you an incredible insight into market direction. Just something to note, the US 2-year and the US 10-year yield are on a definite rampage. Since the 1st of January, the US 2-year yield is up 9.44%. The US 10-year yield is up 11.61%. As we would anticipate, if the yields are coming up, and especially if the dollar is gaining strength, which is not really doing at the moment, but the yields are coming up, we can see gold and silver under negative price momentum. This is to be anticipated. Also, a bit of a helpful tip, you can see that silver tends to retrace and increase more than gold in percentage terms. Just keep your eye on that. One thing that we did see in yesterday's session, the VIX exploded upwards. Also, unfortunately, junk hit a level of short-term resistance and it tanked downwards. Copper is still positive, but if you're in the service, please look at the structural levels. Copper is getting into some very extreme overhead structural resistance. When turning to the major indices, we can see the S&P 500 and the Nasdaq were both red on the day. I would suggest keeping your eye on Apple. Apple is doing something really interesting. It's coming into structural support and it could bounce the entire market. Also, Tesla's looking very interesting. It's coming into structural support as well. NVDA did end up selling down in the session, and there's still negative price momentum on Microsoft. MicroStrategy has gone from positive to negative. Just bear in mind, the FOMC meeting minutes will come out, unemployment claims, and the flash manufacturing and services PMI. We can see when we look at total crypto market cap and Bitcoin, they've both retraced. Bitcoin is hovering around a very key structural level. We'll have a look at that chart a little bit later on. Ethereum has been on a rampage. We've seen Ethereum come down, but there's been a huge amount of inflows into BNB. It is currently inverting, and if we look at all of the other alts, we see something completely different. The other alts are coming down at the current time, and we've had some trend changes. When it comes to ADA, it's gone from positive to negative, and Doge has gone from neutral to negative as well. Solana has maintained its negative outlook at the current time. Litecoin and Bitcoin Cash are under negative pressure, as is AVAX. Don't forget the token unlock on AVAX. When looking across the liquidations in the past 24 hours inside the crypto market, there have been less total liquidations in the past 24 hours, but it's still a lot. But the longs maintain their process of getting hit, whilst the shorts are getting hit, but not to such a degree. Eventually, the shorts will liquidate the longs, and then the longs will have their turn. If you're liking the content so far, please smash that like button and consider subscribing. We have one of the best communities on YouTube, and we'd love to have you as a part of it. And thank you everybody for your great comments in the last video. Now let's get back to it. When we look at Bitcoin without the structural levels on, it's really hard to understand what Bitcoin is actually doing. But when we throw our SLs on, or Standfield Levels, it becomes really clear. Bitcoin is currently trading at 50,943. We can see all this structural support playing in just around the current price. We do have a little bit more structural support beneath that. In the past, we've seen Bitcoin sell off down to this structural level and seek to bounce up to try to get to the next structural level above that 53,200 mark. But if it can't get above, it's going back to structure, and we're seeing this time and time again. If the main markets continue to sell down, we would expect negative price momentum on Bitcoin and the alts. This is not something to worry about. This is something to actually celebrate. When you see prices coming down, especially to structural levels, that's a wonderful opportunity to actually buy. There's been a lot of very good projects that have seen incredible movements up when they retrace down, because the bull run hasn't even started yet. That's an enormous opportunity to get into great projects. Don't run from the markets. Instead, approach the market scientifically. Know where the structural levels are. These structural levels can predict forward price. Total crypto market cap is currently $1.878 trillion. What about the structural levels here? Are we at a level of structural support just like we were on Bitcoin? To answer this question, we're going to pop on the indicator that comes from the service, and it analyzes nearly 4,000 days of data. The interesting thing is all of the charts have different structural levels, and what you can see right now is total crypto market cap is weaker than Bitcoin. It came down to the structural level, but it didn't hold above it like we've seen in Bitcoin. It's actually dipped below it, and it's on the wrong side. This is indicating that total crypto market cap may seek to make its way down to this lower structural support level. Always have your three-dimensional risk strategies playing out. Always be aware the price can move very quickly in either direction. Having a strategy to deal with this uncertainty is very important, and you do it by looking at the cheat sheet. Some time ago, I drew a fractal on Apple predicting where its price could come down to, and it's been following that fractal quite effectively. But we know the key levels are always, or the key focus is structure. We have a lot of negative price momentum playing into Apple's structure at the current time. But something to be aware of is Apple's underpinning objective dynamic market structure, and you can see around this 179 area, it's really quite good. There is a ton of solid structure below Apple's price. So much so that when Apple came down, it's already starting to react to that structure. We may see Apple start to turn around and go forward. If we see more negative price momentum, we've got a ton of structural support down here, which could end up reversing Apple's price. This is something that you must be aware of. We've seen in the past, when Apple is weak, the stock market is weak. When Apple is strong, the stock market is strong. This is what makes it vitally important to know where your structural levels are. If we get below structural levels, we can see sell downs to structural support. And notice how strong this structural support is. Last time it rebounded Apple's price up, but this particular line around the 187 mark is really important. Keep your eye on this line when Apple finally rebounds up. With a knowledge of the CTKS method, you can understand where the structural levels are inside the market. You can learn how to draw the CTKS method up for yourself by visiting ctksmethod.org. Just go into the certification and you'll find there are 2 levels of standard certification, level 1 and level 2. It may look easy to draw these lines, but it is not. And once you learn how to draw up lines from a practical stance, you can draw them up on to any price chart. You also get a certification for level 1 and level 2 as well, but only from ctksmethod.org. The key is to analyze all of price history. In Apple's case, that's over 15,500 days worth of data being analyzed through level 1 and level 2 standard certification. You can learn it yourself and apply it to any chart. To help you to understand structure better, we can look at XRP's price, and this is over nearly 4,000 days worth of data. XRP was having a little bit of trouble just recently. What we're going to do is we're going to turn on the structural levels and we're going to interpret what comes next. Turning on the structural levels, we can see that the 56 mark was a bit of a problem to XRP. It came down to structural support around that 55 area. Couldn't hold it, backside retested it and made its way down. You can see there's no real consolidation here, and that's a big problem for XRP. But the more structural support levels you get, the more safety nets you get, the more rebound you get. Let's fast forward on price and see where it went. The purpose of looking at structural support and structural resistance is exactly that, to understand how weak or strong a particular project is. When you know where the structure is, you can start to interpret it. Financial charts need safety nets because if they break through a safety net, they're going to the one below. And if they just slice through it, it will need multiple safety nets to catch the price. And you can see this consolidation that's been happening with XRP's price around all of these structural levels. Now we're starting to see some different kind of behavior in XRP's price action. It's starting to get above all of these structural levels. It's got its eye on 55. Inside the masterclass, I teach that it's a good idea to just load the lower levels up, because when you look at anything like crypto, but literally any financial chart, it can always come down before it shoots up. So it's not catching you off guard, going all in and more just at the current price. Even if the price was to come up to the 55 level, it doesn't mean it's going to go straight up and this is the bottom. This is what catches most people off guard. There is generally a break down before a break forward. Structural levels are vitally important to understand. When we look at NVIDIA's price history and price action, we know that NVIDIA's price is all about structure. It's gaining the X-ray vision into what NVIDIA's chart actually looks like. That is the key. So let's pop on the indicator. When we do so, we gain X-ray vision into the markets. We were just here on yesterday's video. The one thing that we can see, NVIDIA went through these two safety nets and they were quite strong. But when you have a negative fresh air gap, it's quite likely that you'll overshoot these safety nets. These safety nets are kind of flexible. They're not brick walls. They're literally safety nets. They will bend. If you have a lot of momentum down, they won't act as a brick wall. They'll act with elasticity. And we saw it came back and tested that 695 mark and was coming down to the lower structural level. And we can see NVIDIA still trading. We can see that it's starting to get into this structural area. This will act as a safety net, and we might just go a little bit below to see the level below because, wow, they're going for it. One thing that we can see, if we lose this structural level between 612 to 621 is very solid structure. We're likely to get caught in here with NVIDIA's price. This negative fresh air gap is always a problem. Negative fresh air gaps means that the price can fall down very traumatically and dramatically. But if you know where the safety nets are, you're not concerned at all. The biggest cause of anxiety is simply that people don't know where the structure is. And you can already see this structural level is rebounding price. As we can see, it was all the way down here and it said, oh, that's a structural level, I need to obey it. Always keep in mind that your structural levels are drawn out throughout all of price history. When we look at that, it's in excess of 9,000 days for NVIDIA. If you don't know the structural levels, you're always really unsure, where do I buy, where do I sell? But with the structural levels, you're not guessing. You actually know where smart money is going to reverse price. And you can see because of that structural level, price has reversed because smart money is always seeking to push below a structural level just to absorb a whole lot of orders just to reverse things back. What you will find, these SLs, these Standfield levels, are literally forward indicators of price. When you know where they are, you're not so concerned about price and you don't get freaked out. You just say, wow, the best thing on earth is on sale. I want to buy at structural levels. And that's the way to go. It's like knowing when the special sale is on for your favorite things. Thanks so much for tuning in. Kate and I are so grateful that you're joining us on this journey into the markets. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again in the next video. Bye for now.